Fast food is so delicious and so unhealthy. Should we eat fruit and vegetables? Or should we eat pizza? Yes, Domino's Pizza to the rescue. Very tasty and ready in minutes. Domino's is smashing the food industry, but is it still a buy? We will look at the history of Domino's Pizza and its business model. We will also discover if they are just a pizza company or are they moving into tech. Then we will explore if they have some future endeavours to grow the company. And finally, how are their finances stacking up in the food industry. Then once you have gained the knowledge, that will help you do more research into Domino's Pizza as an investment. It's time to put some vegetables on the pizza to make you feel less guilty when you're eating a delicious, scrumptious, juicy meal from Domino's. Let me, the financial guru, take you on a journey to discover if Domino's is right for you. We will begin where it all began, with two brothers sharing an idea. The story of Domino's Pizza all started with two brothers named James and Tom Monaghan, who brought a small Michigan pizzeria named Dominicks, where the brothers borrowed $500 to buy the store. The pizzeria was initially run by the both of them until 1961, where James traded his half of the business to Tom in exchange for a Volkswagen Beetle. Tom Monaghan established the business to support himself while he studied to be an architect. Soon after, however, he dropped out of school to build the business. Tom later purchased two more pizzerias. He wanted the additional stores to have the same branding, but the original owner of Dominicks forbade him to do so. That's why he later revamped its image and changed the name to Domino Pizza in 1965. The logo of the pizzeria originally had 3 dots, which represented the 3 original stores in 1964. And Tom wanted to add a new dot every time he added a new store. But his idea faded as the business quickly expanded, and Domino's grew in success, attributed to a simple but powerful idea, Monaghan, who had been raised in Catholic orphanages and foster homes. He believed that people who ordered pizza were hungry. To keep them happy, a company must not only deliver pizza, but promise fast delivery. Domino's went on to guarantee pizza delivery in 30 minutes or less. Their 30-minute delivery philosophy began to blossom in the mid to late 1970s. In 1967, the first Domino's Pizza franchise store was opened in Michigan. The franchise concept helped to dramatically accelerate the company's growth. By the late 70s, Domino's Pizza had a total of 200 franchises all over the United States. By 1983, Domino's showed that they were ready to go global as they opened their first international branch in nearby Winnipeg, Canada. In that same year, the 1,000th Domino's store opened. In 1985, Domino's opened 954 new units, making a total of nearly 3,000. In 1989, Monaghan stepped down as the Domino's president for 2 years to devote himself to philanthropic work. According to some press reports, the company did not do very well during that time, but after Monaghan's return, the company was able to restore profitability. In 1992, Domino's began the national rollout of breadsticks, the company's first national non-pizza menu item. In 1993, crunchy thin crust pizza was introduced nationwide. In that same year, the company dropped its 30-minute delivery guarantee in corporate stores, following high publicised accidents involving Domino's delivery drivers. Oh no. In 1994, the first Domino's store in Eastern Europe opened in Warsaw, Poland. In the same year, the first agreement to develop Domino's in an African country was signed by Specialized Catering Services Incorporated in 1995. Domino's Pizza International Division opened its 1,000th store. Domino's basic business strategy has been to offer a limited menu, carry-out or delivery only. Until 1992, the company's outlet offered just 2 products, Domino's traditional hand-tossed pizza and Coca-Cola. Beginning in 1992, however, Domino's began to expand its menu options. During the next 5 years, it had added breadsticks, ultimate deep dish pizza, crunchy thin crust pizza, buffalo wings, Roma herb crust pizza, garlic crunchy crust, and pesto crust pizza. Not even French fries nor chips yet. In addition to its corporately owned stores, Domino's operates an extensive franchise network with independent owners operating Domino's stores. According to the company, over 90% of the original 12,000 franchisees started with the company as drivers. The company's franchising system provides ownership opportunities only to qualified internal candidates to have successfully managed and or supervised the Domino store for 1 year and must have also completed the required training courses. External candidates are not considered for full franchise status. However, external investors approved by Domino's can become 49% owners in the franchise, supporting an internal candidate. Domino's today is the largest pizza restaurant chain in the world, based on global retail sales with more than 17,800 stores in over 90 markets. Founded in 1960, our roots are in inconvenient pizza delivery, while a significant amount of our sales also come from carry-out customers. Although we are a highly recognised global brand, we focus on serving the local neighbourhood in which we live and do business for our large network of franchise owners and company-owned stores. On average, we sell more than 3 million pizzas each day throughout our global system. Our business model is straightforward. We handcraft and serve quality food at a competitive price, with easy ordering access and efficient service, which are aided by our technology innovations. Our dough is generally made fresh and distributed to stores around the world by us and our franchisees. Domino's generates revenue and earnings by charging royalties to its franchisees. Royalties are an ongoing percent of the sales fees for use of the Domino's brand mark, which can be up to 10% depending on your experience. The company also generates revenue and earnings by selling food and equipment and supplies to franchisees, primarily in the US and Canada, and by operating a number of our own stores. Franchisees profits by selling pizzas and other complementary items to their local customers. In our international market, we generally grant geographical rights to the Domino Pizza brand to master franchisees. These master franchisees also profit by running pizza stores and often by sub-franchising and selling ingredients and equipment to those sub-franchisees. Everyone in the system can benefit, including the end customer, who can feed their family from our Domino's menu items conveniently and economically. Our business model can yield strong returns for our franchise owners and the company-owned stores. Domino's can also yield significant cash flow to us for a consistent franchisee royalty payment and supply chain revenue stream, and with moderate capital expenditure. We have historically returned cash to shareholders through dividend payments and share buybacks since becoming a public traded company. When you think of the world's top online brand, we typically think of e-commerce and technology giants like Amazon and Apple. However, Domino's, the world's largest quick service restaurant, claims to be amongst the top 5 e-commerce retailers as a result of the incredible work they are doing to stay exciting and relevant to today's customer. The company's global dominance features powerful online capabilities, including 15 different ways to order, and this dynamic approach combined with their popular loyalty program, together driving incredible success with 101 consecutive quarters of sales growth. Recently announced, given how critical it is to get the basics right, Domino's first embraced an honest yet risky strategy in 2009 when it admitted it had an inferior tasting product. The approach was a powerful example of how authenticity can inspire trust, and the Pizza Turnaround campaign allowed it to effectively reinvent itself as a surprising, honest brand. Alongside the product focus, Domino's launched its online ordering platform over a decade ago. 2008, a strategy credited with creating the foundation for its success and becoming the largest pizza company in the world. February 2018, when it obliterated Pizza Hut with its product platform in place, the brand's deliciously creative digital marketing initiatives are now playing the lead role in their ongoing dominance. Their Domino's Rewards program is a classic example of a clear, consistent, and compelling loyalty program that's easy to understand and use, and it continually enhances with clever and unexpected tactical ideas that are truly engaging the user. Let's look at how the online food ordering icon uses a clear consumer focus and the power of the latest technology to differentiate itself in such a competitive industry. Domino's launched their loyalty program in 2015, focusing on driving purchase frequency as their main business objective. Their loyalty program rewards you for ordering with each order over $10, earning you 10 rewards points. 6 orders or 60 points entitles you to a free medium pizza. Simple, the company recently claimed to have over 20 million members on its program. While some of the brand campaigns are more PR stunts than anything else, others make great commercial sense. For example, I'm not convinced how compelling the wedding registry option is proving, which allows the guests to pick pizza as a wedding gift. But there are some ingenious ideas that we can learn from. With the ever-increasing demand on our time and attention, consumers are becoming increasingly adverse to exerting effort in their daily life. Domino's answer? The zero-click order. A genius approach that requires one initial setup, and then a repeat order is created and delivered automatically when you open the app and simply wait for 10 seconds. The brand knows that groups love pizzas and companies are a great target market. Domino's is the first restaurant I've seen to integrate ordering with Slack, an online productivity tool that facilitates collaborating working, and now pizza ordering. So simple and so clever. Along with traditional desktops and mobile channels, Domino's has excelled in creative ideas to order. For example, in the US, you can simply tweet or text the pizza emoji to order your favorite, and social assets such as GIFs, snaps, and emojis have also been captured from social channels and used in their brand TV campaigns. In their Super Bowl advertisement, the concept was both innovative and effective, earning powerful publicity from some of the top media sites in the US, including CNBC, CNN, and INC.com. With the football final driving pizza consumption to one of the highest days of the year, Domino's decided to celebrate with everyone eating pizza, their pizza, competitors' pizza, homemade pizza, even pretend pizza, dubbed the Points for Pies concept. It invited users to send pictures of their pizza, no matter where or how it was made, or bought with a loyalty points for simply sharing the image. Domino's digital team then used artificial intelligence software to verify the uploaded content for pizza to ensure only pizza pictures were rewarded. Similar to their rewards program proposition, users earn 10 points per picture uploaded, with a commitment to awarding 100 million points towards free pizzas and pies during the program's 12-week duration. While it might not make immediate sense to consumers why they are being rewarded for buying pizza from competitors, for Domino's these customers were like gold dust. They shared their data and became engaged in the app usage, and of course have clearly identified themselves as a pizza lover, a potential customer for future orders. With so many clever and creative concepts, it's no wonder the Fast Company describes Domino as one of the world's most innovative companies. In 2018, the then CEO Patrick Doyle explained that the company is as much as a tech company as we are a pizza company, with half of its 800 employees in the headquarters working in software and analytics. The pizza chain has gained more than 16,000% on the stock market thanks to being a commitment to reformulating its recipes back in 2009 and steady investments in technology to allow customers to order through multiple digital channels, and enables the company to track orders in addition to other benefits. Its tech investment have also made internal operations more efficient, and the company has transformed itself from a traditional pizza chain to an e-commerce business that sells pizza. The success of that strategy is evident. In addition to the stock's performance, the company has reported 40 consecutive quarters of same-store sales growth in the US and 109 consecutive quarters internationally, or more than 27 years without a decline in comparable sales outside the US. That shows how dominant the Domino's brand has been globally. Still, past performance isn't a guarantee of future return, and the restaurant industry is changing quickly. Let's take a look at where Domino's stands today to determine whether it's a buy or not. Domino's in 2021, like most restaurants' delivery operations, Domino's was a big winner during the run. For 2020, same-store sales increased by 11.5% in the US and 4.4% internationally, as the company faced mandatory store closures in some of the countries in which it operates. Overall, the collapse of the dine-in restaurant visits provided a tailwind for Domino's. Adjusted earnings per share growth for the year was strong, rising 25% to $12.01. Those trends continued into the first quarter, with same-store sales rising by double digits both in the US and internationally. Pre-tax income rose 27% to $149.6 million. Management did not offer guidance for the rest of the year, but reiterated its 2 to 3 year outlook of 6 to 8% annual net store growth and 6 to 10% annual retail sales growth. Given the company's momentum and market share gains coming out of the Rona, outlook seems very achievable. The company should continue to gain leverage on the bottom line thanks to the franchise model, meaning investors should expect double-digit earnings per share growth, especially as the company continues to buy back stock. Domino's also continues to innovate, having recently partnered with autonomous vehicle company Nuro to test autonomous pizza delivery, which has the potential to save the company and its franchisees on drivers' expenses, which is key as labour shortages are likely to persist. Yet again, another company getting into autonomous driving. Sadly, the bottom line is, how do you make money through less labour costs? But how much is each car going to cost to buy and also maintain? Maybe if they are leasing out the car, it would make more sense as low cost to them as manufacturers fix the faults. How is Domino's Pizza as a dividend play? Very poor in terms of yield at only 0.79%, even if the dividend paid has jumped up more than double in 5 years to $3.76 per share a year. It's not going to make your money grow in a hurry. The promising thing, the payout is only 29% of all cash flow. There is a lot more room to grow this dividend. So that is a positive sign. With 8 years of dividend growth behind them, they look committed to growing the dividend long term. But mostly at the moment you would be looking for growth. So let's have a look at the bottom line revenue and see how Domino's is tracking. As you can see, in 2016, revenue was at $2.4 billion, up to $4.2 billion projected in 2021. Don't be surprised if this jumps up to $4.5 billion, getting close to almost doubling in 5 years. Interesting to see that net income has more than doubled, from 2016 of $214 million to close to $500 million currently. So they claim they make a lot of money, but 11.5% return final net income after expenses is quite low. No wonder they are investing in autonomous driving to see if they can save costs there. So Domino's revenue is 5 times sector average, which is encouraging, and net income is double the average of the food sector, with only negative gross profits 20% down on the average in the sector. One interesting fact I found is the short interest. I found interesting at over 5%. That is quite a lot of people that believe Domino's is ready for a crash, as the Rona era is going to disappear sometime in 2022, with vaccine being rolled out at a very fast rate. So that leaves room for a theory that people will go back to restaurants and less to fast food. But if you look at the demographic under 30 years of age, they love instant food delivery with no hassle, and Domino's smashes in that area. Through convenience and cheap prices and delivery, all done on one app. Shares outstanding from 2017 have dropped from 48 million shares outstanding to 39 million currently. So for you own 19% more of the business in a 4-year period, which is very impressive, although in the last couple of years that has slowed down. Now, understanding all this, what price should we pay for Domino's? I really believe the stock is overvalued for the industry, and the growth story has been great so far, but how much more room have they got to grow? As the signs for the share is that they are stagnating in terms of net income and revenue. So if you're new to the stock and want a margin of safety, I wouldn't touch unless it dropped to $350, as I want you to at least double your money, and to load the boat would have to go under $300. But right now, there are better opportunities for your money. They are definitely one of the best food companies in the world. So if food companies are your speciality or your knowledge, then they are right at the top of the list currently. But long-term growth potential is my biggest concern. But long-term growth potential is my greatest concern. They may grow, but at a slow rate. I can see them getting to $1,000 as the stock is quite popular. But personally, I'm seeing maybe $800 unless they come out with a new idea that pushes them forward. But from what I'm seeing, they need to find new revenue streams to make future profits. So I wish you well in making your decision on buying any stock or cryptocurrency. Remember, as all my videos are for entertainment and educational purposes only. Domino's technology is being underutilized currently, and maybe they should look at other avenues in the e-commerce sector to build their brand further. Remember to smash the like button and subscribe to the channel. While I'm off to eat some cheesy garlic bread and some meat lovers pizza. Cheerio for now.